Hello, and welcome to the next in our series of COVID-19 webinars. Today, we're looking at crisis communication and strategy during COVID-19. We thank you very much as ACG members and non-members for joining us in our previous webinars. We've had a great response rate and great feedback, and I believe this is just going to be another one in our series of helpful and insightful webinars. I'm joined today by two experts in the field, Roger Pondell of Pondell Wilkinson and Ian Campbell of Abernathy McGregor. Ian, I'm going to ask you, if you would, to give folks just a little bit of a background on yourself, some high-level perspective. And then, Roger, I'll ask you to do the same when Ian is done.
Sure. I'm vice chairman of Abernathy McGregor, and we specialize in crisis communications, transaction work, investor relations, and the like, and have done a very substantial amount of work in the private equity arena over the last 20 years, and that the firm has as well sort of grown in tandem with the growth in the private equity field into what one journalist recently called the new too big to fail sector in our economy. So happy to be here with you today.
Great, thank you, Ian. Roger?
Thanks, Michael, and hi, Ian. How are you?
Hey, Roger.
My background is somewhat similar to Ian's. I'm CEO of Pondell Wilkinson. We're a long-established investor relations and corporate communications firm based here in Los Angeles. The firm's 50 plus years old. I was not the founder of it. But we're industry agnostic, but we focus principally on middle market companies, probably similar to a lot of the people watching today, middle size, both publicly traded companies, privately owned companies, from, again, all industries and really all sectors, and we tend to perform a wide range of services also for professional and financial services companies. And I know, Michael, you indicated before that maybe as a high level or overview perspective of the subject of this webinar, crisis communications during COVID, maybe I could start and then give a little overview before the questions, and then Ian. I jotted down 4 points. They're going to sound very simple, but they're kind of important points and very basic, I think, to what we believe are best practices. But they've clearly surfaced as germane, if not critical, over the past week since the shutdowns have started. And I'll give you the 4 points, but I brought a friend along because the friend is very symbolic of these 4 points. And maybe a lot of you, we're all taking walks now, right, in our neighborhoods, maybe more than ever. And I don't know in your neighborhoods, but in my neighborhood, there have been these little guys who have been propping up in the window. And they're stuffed animals. They're not all gorillas like this one. They don't all have hearts. But I think it's kind of symbolic if there's anything good coming out of it. And I don't know if it's good. It's that we are all, it's a cliche, we are all in this together. And these guys are coming up all over as symbolic of that. Okay, my 4 points, I'll try to be really quick. In this crisis, unlike other crises, silence is not an option. Sometimes silence is an option. And I think when a journalist calls on a sensitive issue, sometimes the CEO might tell us, or we might tell the CEO, don't talk. You're not going to gain anything by talking. Don't say the words no comment, but sometimes you just don't want to talk. Well, that's not an option in the crisis of COVID. Virtually no company is immune to it. No company should be immune to commenting in some manner at this go round. Not necessarily to the press, but also maybe to the press, but certainly on a direct basis to multiple audiences, each of which has different concerns. So point number 2 of the 4 that directly follows, the message is being communicated, while there needs to be a consistency of underlying facts, must be as tailored as possible to the specific audience you're talking to. There's a saying in our industry, and it's taught in public relations classes at universities, that there's no such thing as general audience, or there's no such thing as the term general public. You hear people say the general public. In our world, there is no general public. We look at very specific audiences, whether they be the operating CEOs of a PE firm, the companies they own, the CEOs, whether they be customers of those operating companies, employees at all levels, whether they be investors, a handful of investors who might be VCs of a tech firm, or could be investors of a publicly traded company in which there could be hundreds of thousands. So there's a lot of different people. Points 3 and 4, and then I'll shut up. 3, this should go without saying, but it needs to be, unfortunately, it needs to be said all the time. The communication must be 100% truthful, and it's got to be realistic, not just aspirational, although it could be aspirational, but the facts have to be clear, transparent, and they have to be facts. And lastly, specifically during this crisis, we think that the communication has to be somewhat frequent, because protracted periods of silence create protracted periods of fear and anxiety that we're all facing. So they have to be regular. And I'll turn it back over to you.
I think I would agree with the vast majority of what Roger just said, and come at my overview thoughts from a slightly different angle, not a conflicting angle, but a slightly different angle. And so here are some sort of very thumbnail takeaways specifically for private equity and portfolio companies. First, I would say you have to assume that you are going to be, as a private equity firm, you are misperceived and are going to be vulnerable to being misperceived. In 2008, we worked very intimately with several very large banks that no longer are with us today, and some that are with us today. It was very, very difficult to get even seasoned journalists to understand the nature of the liquidity crisis that the country was facing and the credit quality crisis, or the nature of the solutions that the government advanced. So you're moving in a terrain where stereotypes about private equity, unfortunately, abound, and that calls for navigating it with some caution and some precision. Secondly, we're doing so in a presidential election year. And so 2020 means that in a hyper-partisan environment, both sides and both sides' allies are looking for any opportunity to seize on any perceived public misstep to advance their candidates or their party's cause. So there's lots of reason to think really carefully about how actions that would normally make sense in private equity might get turned against you. It makes sense to figure out how to lever a company properly under the right circumstances. It makes sense to figure out how to take out cost. It makes sense to replace managements. And I would be the first to suggest that private equity fee structures make perfect sense. But you can take all of those items that I just mentioned and see how, in what the British at Yorktown called the world turned upside down, how it could play opposite from what most PE firms are used to having work for them.
I think those are really great, kind of from the high level standpoint, really interesting. Let's stay kind of in that spot, right? So when COVID-19 hit hit with force here in the United States. As I was speaking to the membership at the Association for Corporate Growth Los Angeles, in particular our private equity members, they were 100% focused on their portfolio companies, right? And so what does this look like from a communication standpoint when we're looking at private equity portfolio companies? We've got issues around employee activism, right? We've got concerns around employee safety and balancing their safety with a need in some areas to continue operations, right? Where remote workforces perhaps aren't as, where we can't be 100% remote as we could for potentially a law firm or something like that, as we look at portfolio companies. How do you advise private equity professionals as they focus on their portfolio companies to consider communication?
Well, a couple quick thoughts, and I'll then let Roger jump in. I think a good starting principle is, does what my portfolio company is doing, or what I want them to do, meet the "we're all in this together" test? Now, that's easier said than done, obviously, because there's a lot of competing pressures on portfolio companies. But you want to make sure your portfolio company can be positioned as really paying close attention to employee welfare and well-being. You want to be sure that, to the extent there is pain, that there is some sharing of pain. So, for example, this isn't a private equity situation, but we have a company in the much more painful oil and gas space right now, and they have had to furlough some workers. They also have to keep people working in spite of health risks, because you've got to maintain wells, you've got to maintain, the entire structure of producing oil and gas. And so a part of what they have done is retain workers, but furlough with reductions in hours. And at the management level, everybody's taken a salary cut, a pretty significant cut, but nobody's cut the hours that they're working at the management level. So that doesn't solve the problem, but it certainly gives you a platform from which to say, we recognize there's a lot of pain in the country right now, and we're trying to share in it in a responsible, thoughtful way.
And Roger, are you when you're talking to clients? I mean, it does seem that on the management level, management proactively, preemptively, reducing salary or foregoing bonuses for the year. I mean, are we at the point where this is sort of table stakes? Because when you're talking to clients, is that something that you're almost leading with?
Yeah, absolutely. I think regardless of whether it's a private equity firm, a holding company, just an operating company, I think they're all focused on the exact same issues. At the private equity level, looking at their portfolio companies, and I was speaking with a principal of a private equity firm that we work with, similar to a private equity firm this morning. They have 5 or 6 portfolio companies. They're all facing different scenarios, and they are guiding their operating management teams. I mean, they're concerned for their own investment, but they're guiding their management teams on what to say to their own employees. One of the firms that they own happens to be an asset manager in the commodity space, and their business has increased almost, I hate to say it, I'm not going to mention the name of the firm, 400% since the beginning of March with their assets under management. Happens to be asset managers of commodities funds. Another company that they own is having an opposite situation. They can't get basic parts for the company, for the products they make. So they, in essence, have to stop. So it's different with each case. And I think a lot of onus is on the operating company itself. At the PE firm level, just being in close communications, as opposed to the mass communications that is more being done, at the operating level.
Yeah. And what about so what about that balance though? When you're looking at employees, the balance between let's say employees in the essential services. So, Ian, you mentioned oil and gas, right? Where there is a need for those folks to go to work still, a critical need. And yet there are people who are, they have spouses, they have children, they have elderly parents, and they're worried about their own safety. How are you advising clients to communicate when they're trying to balance the need to continue operating with the safety of their employees or their employees' concerns for their own health as we navigate through COVID-19?
Well, I think you have to move down a parallel track. For example, we have a longstanding, terrific client in the technology space. They're publicly traded, so they're not private equity held. And they would be considered an essential industry. I mean, arguably, we wouldn't be having this conversation if there weren't companies in this space. And so they found, to go back to the beginning of your first question here, Michael, one employee who had hardly been with the company at all before they shut down, had gotten to a major regional newspaper with a complaint that the operations, which they were starting back up in a limited way, weren't safe. And we found ourselves late at night, wrestling with a reporter at this paper because the initial post of the story on the website was highly inaccurate because the information was highly inaccurate. So one quote unquote activist employee, however ill-informed, can create a really serious headache. Now, in this case, we did make some meaningful progress, and the progress was because the company had implemented a whole lot of steps to make the way the manufacturing operation worked significantly safer than it would have been if they hadn't changed their practices. We were able to point. So they did the smart and right thing in terms of safety, and then B, I think you got to pull together your case for why company X in industry Y is really essential for operating purposes. It's got to be both paths hand in hand in lockstep, really.
Yeah, I think so too. I mean, there's some businesses that are government mandated as essential businesses, others that are not, that don't want to close down. Most businesses, they're trying to. Everyone's working from home as we are. It's easy for us as service providers to work from home, relatively easy. But I think there's some messages of that. Almost every company, it's almost become a cliche now that we're a month into being at home, about first and foremost, the priority is the care of our employees and safety of our employees. I mean, it does sound like a cliche at this point. Every company has mentioned it in some form or another, and I think it's important to do that. But we're beyond that now. We're right in the middle of this thing. Hopefully, we're getting toward the end of it. I don't know if we are yet or not. But I think those are all important, concerns that we have to have, and there's going to be messages that employees are not going to like. There's going to be messages that customers are not going to like. We have to deliver them, and deliver them in a sensitive way, but a realistic way. I think everyone won't be happy about all the messages, but they will all certainly understand it. And I think conveying it, how to convey it, what medium to convey it, all of these nuances of words, play a big role in how they're received.
We saw a client bank in the PPP program, and which they had to get up and running in extraordinarily quick order, and 3 points. A, they were really proud of what they had done, because essentially in less than a week they were taking loans, and they assembled hundreds of people from scratch, essentially. And there was a lot to be proud of, but our counsel was not to start bragging about it prematurely.
Okay.
Second observation was well, as it turned out, they hit the maximum amount of small business loans that they could take. Now, explain to the average small business owner why his or her bank has a limit, not a government, not imposed by the PPP program, a limit on how many small business loans they can put on their balance sheet. Even if the loans ultimately will be forgiven or backstopped by the government, they're not exempt from liquidity requirements and capital requirements and risk ratio requirements that the government also imposes on them. So they had a very interesting messaging challenge, which was how, after being open, the window being open for a week, do we tell all the folks who are still in the queue that they can't be funded, A, because the government's run out of money, and B, because we can't take any more loans. And I think if there was a useful principle that they applied in this instance, it was the communication was really stripped down and clear, thematic, concise. The lawyers were all locked in a room and not allowed to, and only allowed to see the documents for a very brief period of time. And although I'm being facetious, the communication did not read like corporatees. And I think that helps with the credibility issue that a lot of companies will have going through this period.
So and I'm Roger, I'll let you jump in, but Anna, what I'm hearing almost is that, even if the message isn't one that your customer wants to hear, communicating it clearly, consistently, concisely does matter, right? The way it's conveyed, even if it's bad news, right? It still matters how it's done. And there's some thought to be given there. Yeah.
I think it's better to say I think it's better to say we have some bad news and we're not happy about that, but we need to be straightforward with you, than to either gild the lily or make it read too much like legalese.
Yeah, and particularly in banks, I think you're right, Ian. It's very different with the big giant banks of the world, the B of A's, and the community banks that are much smaller but still big banks. A lot of middle market companies, in particular, are customers of middle-sized banks, not necessarily the big giants. Right. And I think they're facing the same exact problems. Some of them say, boy, I wish I was with a big bank now. Other ones who are with a big bank are saying, oh my God, I'm with such a big bank. So it's a problem, all around.
Yeah. Well, let's take a slightly kind of different perspective. Let's stay with our PE firm, but now pivot and explore maybe a little bit the advice that you have given or would give as our PE funds are talking to their LPs. What does that conversation sound like today? How are these PE funds, or how ought they be, sort of framing this issue as we go forward? I would assume a lot of the same kind of themes about, the cadence of communication and what we've talked about. But what's your advice been there for the folks that are in PE talking to their limited partners?
Well, I think part of this hinges on the facts in each individual PE firm's case. So let's suppose a good deal of your funds, your LPs, happen to be public pension funds. Suddenly the world has shifted in a way in your favor. When Maxine Waters, who chairs the House Banking Committee, makes sympathetic noises about private equity, about businesses being owned by private equity having access to the PPP program, the world has changed. And that's a byproduct of having LPs that are public pension funds that need to produce a return for retired workers. And I think there's an opportunity there for alliances where the interest of the retired worker that a CalPERS or a CalSTRS, for example, is representing, and the importance of the fund's success to those returns allows you to create some alignment that may be very useful in this kind of politically chaotic 2020 environment. I think the second thing is, what strategies are you going to be adopting as you look for new investment opportunities, and how do you explain them to your LPs? So take pipes, for example. There may be an opportunity to return to pipes with all these, with falling stock valuations of publicly traded companies, but you're going to have to persuade your LPs that you know how to avoid catching a falling knife, and that where you might move into a pipe situation, you could do it with sufficient due diligence to satisfy, to assuage their risk concerns. Those are just two examples of ways I would go about thinking about it.
Yeah. No, I think there are many risk concerns that the LPs have, but they have to be realistic and understanding of the situation. We're working with a company that has a fair number of LPs is in the real estate arena, commercial properties, and we just finished. They're communicating on a one-on-one basis with their LPs. So each one is a little different. The messages is the same. There's like a template email that just went out yesterday that they asked us to help craft or help edit or just take a look at it from our perspective as if we were an LP receiving this. And it's a little bit different for each one, but the messages are really the same. That we're going to be communicating with you and telling you what's happening, and a lot of it is out of our control, and we just have to go forward. In the public company arena with IPOs, with companies that want to go public, it's pretty much on hold right now. But what we're hearing from the investment banks is that, maybe come Q3 or certainly the beginning of Q4, October, there's going to be a lot of people, investors, looking for new places to put their money, and it's going to start coming out again. So rather, for the companies that really were planning their offerings and need the funding now, some of the investment banks are saying, okay, we won't go public now. We'll do, instead of a $100 million offering, we'll try to raise $25 million now with privates, whether it be a pipe, whether it be VCs, with the intent of getting more liquidity in an IPO as soon as it is practicable. So there's just new ways that management teams have to look at financing and coping with the current situation. There are a lot of bargains out there. We can get into this in a minute if you want to, Michael, as the moderator with the activism, and if companies aren't performing, is it their fault? Is it the fault of the COVID virus? And what happens when an activist comes knocking on your door? I mean, that's
I think it's a natural segue. So why don't we explore that? I mean, I think as we've seen the impact here, there are companies who are going to be susceptible to that type of activism, right? Shareholder activism. So whether you have clients where you're seeing that happening now, or hopefully, you're proactively helping your clients kind of position for that should it happen. But what do those considerations look like? What do those conversations with your client sound like when you're looking specifically at maybe an increased risk of shareholder activism as a result of COVID-19 and then the impact on the economy?
Yeah, well, from an activism standpoint, it's going to be more, if you're a public issuer of stock, that's where you're going to feel the impact. If you're a shareholder, whether you're a private equity firm that may own a chunk of a public company or VC firm, you have to be, the messages are different on both sides. They're almost the opposite. For the public company, you can't turn your head. You have to be sure that all the right things, that you're doing all the right things and you're communicative. I think the worst thing that an activist wants to see is you write to a CEO and you don't get a response back. Invite them in, hear their concerns, share their concerns. If they're existing shareholders, they're in a sense partners with you already. Acknowledge them. There's different degrees of activism, but I think the weaker companies, the companies that maybe had valuation issues before and are now seeing more extreme valuation issues, they will be more vulnerable, and so we're actually anticipating a rise in shareholder activism in the public company side because of that. I don't know, Ian.
And I think we also have been thinking and hearing that we might very well see coming out of this a rise in hostiles. Because we've got, the strong getting stronger and the weak getting weaker is not an unlikely scenario. And with valuations this low, we've had a few clients put pills in because they felt the valuations were unrealistically low and made them vulnerable. And if you're in that situation, if you're the would-be acquirer, you need to be able to make the case that you're not merely being opportunistic, that the combination you're proposing is a fair value, and if the currency is stock, that there's an upside to your currency. And obviously, if you're on defense, you not only want to paint the approach as being opportunistic, you want to have a pretty clearly laid out path for why you can do a better job of growing the company and creating value. In essence, positioning the current situation as an aberration and something you're well prepared to move past.
Yeah, absolutely critical. I think also from the issuer standpoint, to be alert to new accumulations of stock. If there's new shareholders coming in on the institutional side, know who they are, know their backgrounds, know what their histories and how they behaved. I think that's very important. If there were activists in the stock, in a given stock already, really, they have to be watched. Are they accumulating more? Are they all of a sudden calling? They're gonna call sooner or later because valuations, there's no question. Most companies have dropped significantly in valuation.
Yeah, no, I think that those are all good points and things that folks need to be aware of. Why don't we take a step sort of to the side then, as we've had this conversation, and maybe look at the 2020 election and some of the risks that may expose private equity to, right? So we've got COVID-19, we've got the election. In different ways, private equity is sort of in the crosshairs, right, of COVID-19 and the election. So what is it? It's a broad question, obviously, and we don't have a great deal of answers either on the COVID-19 side or the election side. And yet you've got clients coming to you looking for guidance, advice, direction. How do you layer these on at this point?
Well, I think our starting point on 2020 out of our Washington, D.C. office and their advice has been, if you can maintain a low profile, that's the smart thing to do, because the partisanship is so extreme and so unpredictable. You could be, forgive me, but you could be the president's friend one day and not the president's friend the next day. You could be, you could be in the crosshairs of not only the House Speaker, but you could be in the crosshairs of any number of members of her delegation who maybe she doesn't agree with all the time. So there's a lot of risk for being the tallest tree in the forest. And other than the very largest private equity firms, most private equity firms probably have some running room to remain low profile. That's point one. I think point two is you still have to be looking, practically speaking, at the potential impacts of how you behave beyond the election. depending on how the election turns out and depending on how private equity is perceived to have behaved, you're either at more or less risk for changes in tax law and changes in regulatory in the regulatory regime that affects the industry. 2008 gave us Dodd-Frank, which was the regulations for which were being written years after the 2,000-page law was enacted. There was a piece in Vanity Fair, which I would recommend if you haven't read it, everybody in private equity on this call, go find and read. It's by a very, very smart journalist, Bethany McLean, who is quite numerate, unlike many journalists. And the case she makes is private equity is too big not to be helped by the government because ultimately so many worker pensions that are managed by LPs depend on private equity performance. But she also makes the argument that any help that comes from the government needs to have strings attached to it. And then she goes into some of the items I just mentioned. That ought to give everybody a sense of what level of political risk there is out there, even if it makes good sense to try to help your portfolio companies get some government assistance.
Yeah. I had a feeling, Michael, that this conversation, like many conversations that we all get into socially, you say we're not going to get into politics, but bam, we're not really talking about politics. But I think we're just starting to see it with COVID-19, with some of the openings of certain areas. Some people think it's politically motivated. I mean, if you're in the restaurant industry, you want to be open. No question. I live in an area that I live in right outside the LA County line on the Ventura County side, in Westlake Village. And we just heard this morning that, okay, Westlake Village is now open, or not Westlake Village, Ventura County, the beach is just open. So my 13-year-old grandson, to put this in personal terms, he asked his dad this morning, he said, let's go to Ventura because I want to go surf. So now that's not political, but I think it's starting to get politicized. What it means, if how I think it impacts from a PE firm, from an operating company. There's a certain impact on all of them, and I think again, I'm coming. The most important. No matter what side of the fence, I think health and safety has got to be the most important part. But we're seeing this happening now.
Yeah, it's a tough balance, right? Because it's I think Ian and I think Roger, you were agreeing that the advice really is that because there are so many unknown variables in the political context, it's better to just kind of keep your head down, right? The risk reward profile isn't worth it in terms of getting out there. And the tectonic plates are shifting so suddenly that we're dry land is wetland the next day, and yet between PPP and Main Street and the affiliation rules and all of these other issues, I think it is also a difficult discipline for PE to be on the sideline, right? And so I think as part of ACG, we've done our own lobbying. We've done a bit of letter writing and urging members to be in contact with their representatives. We've worked with the association, the American Investment Council, AIC, as well, to do that kind of thing. But it's a tough balance, right? Because you see so much that's going on in Washington, D.C. that is going to be so directly impactful to either the operation of private equity or the portfolio companies that private equity invests in. And yet it seems like the advice is just kind of sit back, let it happen, maybe keep your head down. And I think that's a challenge, right?
Well, I think there's a tension there, but I think the distinction I draw is I'd say use your trade group, use the trade groups actively. There's a little bit of safety in numbers. It's just that you as individual PE firm X don't need to inadvertently put yourself in Congressperson Y's crosshairs.
Yeah. Jen, to the students, to the very first point you made a few minutes ago, Ian, keeping a low profile, I think is probably sound advice.
Now that doesn't mean that you that when a reporter calls, that you don't return the call.
No.
Or that you don't let your favorite PR firm return the call, because that can really have seriously negative consequences too. There one recent instance, the reporter calling was with an investigative journalist outfit, very well respected one, and the story essentially was inaccurate, but hit this private equity firm and its portfolio company specifically very hard. Portfolio company had ignored the inbound call, and it has wound up on the desk of a chief Senate committee, House committee investigator. So let's hope the hearings don't result. But that's, take the media seriously, and if you're not comfortable knowing the rules of the road there, work with people who know the rules of the road. At a minimum, you need to be prepared to get engaged on background or off the record, and educate people, or make a decision to go around the media to get to the stakeholders that are most important to you, knowing that maybe something unfair is on its way.
Right. But to Ian's point, I think, just to reiterate, it's important to return that call, because the reporter will go around you, and you can't always make the reporter your friend. And some of the investigative reporters are cunning. They're really nice. They'll start talking about your kids. Oh, you got kids, you got grandkids. You can't let your hair down on it. But I think, again, to Ian's point, they're trained, and they're not the enemy, but they can be the enemy. And I think, knowing how to respond to them, whether it's through directly or, getting advice from Ian or from our firm or whatever, I think it's important, and there's a lot of nuance when it comes to journalists talking to journalists, and it's really critical to take care.
Maybe let's stay in that area. I mean, I think as you guys are talking about this, a little bit of what you're talking about are sort of the tactics of communication when these inquiries are made, or when we're facing something like this. I know before as we were preparing for the webinar, we as we're bandying about various topics, and I don't remember which one of you kind of said it, but it was this sort of the corporate speak, right? And how, especially now in the context of COVID-19, the typical corporate speak is really falling flat, right? It's kind of landing with a dull thud, and it's not what people want. So, when you are getting called by perhaps not an investigative reporter, but like just media generally, what are the best practices? Let's say you're a mid-sized company. So you're a company in kind of the middle market of private equity, and you're getting now inbound inquiries, be it because you've had to, reduce workforce or, whatever it may be. What are the best practices? Whether you may be able to sort of take us through like a case study in particular, but, what does it look like if it's handled well? Be it internally, be it in collaboration with professionals such as one of the two of you.
Well, I think the starting point has to be whoever's dealing directly with the news media has to know what the facts are. The worst concept to emerge from one of many bad concepts to emerge from Washington, D.C. over the last few decades has been the concept of spin. And you obviously you want to be prepared to advocate for your case, but you kind of have to know what the underlying facts are before you go engage with media. They've got a good nose for spin. Secondly, if you know the rules of the road and you can work closely with your legal team, you ought to be able to arrive at what you can say on the record. There may be mitigating facts that you will want to use, but for various reasons, maybe you can't use on the record or don't want to. You need to know how to do that and be prepared to do that if necessary. And then this is going to sound like a small, silly little tactical thing, but I have found that in recent years, more and more communications professionals prefer to deal with reporters by way of email exchanges instead of getting on the phone and talking to the journalist. And of course, it's much more comfortable and much more controlled as an environment when you're dealing with somebody by email. But if you really want to understand where a journalist is coming from and you really want to shape their mindset, person-to-person communication, not with the CEO of your firm, unless you've really vetted it, but person-to-person communication between the media rep and the journalist can make a significant difference in the quality of the outcome. I referred very early in this conversation to a client with an issue with a major regional daily where the reporter had really got the facts wrong. And the only way to turn that, the way that was turned around was with a conversation at 9:30 p.m. on the phone with a real interpersonal, without giving you all the color, emphatic and interpersonal back and forth.
Yeah. And is that relationship building, or is that just it's harder to get it, it's harder to ignore someone when they're on the other end of the phone advocating strongly for the correct facts?
Well, I think it's the latter in the instance I'm talking about. But I will say, as a general proposition, PE firms don't need to seek attention over time in order to build some decent relationships with media. We have a client, not in the PE space, where we knew for a couple of years it made no sense to seek on the record coverage and feature coverage of the company, but we would put the CEO and the number 2 executive in a dinner with the reporters covering the space in New York on an off the record basis. And I think work like that over time can be very helpful to a company, because at some level, even reporters are human beings, and you can develop trust with reporters, and you can size up who you can trust.
Yeah, I think that's very true. I have one caveat to that. These off the record situations, I think reporters love it. You can't do it in the public company markets, where a financial analyst might say, just off the record between us.
No, you can't do
that. You can do it with the reporters, but our counsel is always be careful of off the record, because from a media standpoint, they may say just between us, off the record. Sometimes they take notes, and then they'll go back and they'll look at their notes, and they may not remember what's off the record and what's not on the record. So the degree of sensitivity, you always have to be careful, and not in having the mindset that whatever you say potentially could get out there. We always say that. We like the off the record because the reporters like it, but I think you almost have to have the assumption that anything you say someday may somehow come out in another life, another world, another day, in print or on TV. So I think there's a certain caution that you have to say, even while you think you are off the record.
Well, a mistake, a mistake I've seen made more than a few times is an executive in an interview will say something and then say, "Oh, now that's off the record." No, it doesn't work that way.
No.
So my yes, since having gone down this path, I will say that's not an airplane you should fly unless you're a certified pilot.
You got to be a certified pilot. There's no question. I love, Michael, give me 1 minute. I'd like to give people something, tactical and practical to come away with, going back to the main subject of crisis communications during the COVID crisis.
Yes.
And I jotted down very specific, and I'll go quickly. It's going to sound like a lot of points, but you can take notes, not take notes, whatever you want to do. One is appoint a designated spokesperson. You don't want a lot of different people in your organizations talking to the masses. Someone who has significant operating knowledge. They can speak to multiple audiences about steps being taken. That's very important. From the PE firm standpoint or an operating company standpoint, number two, communicate with the employees really so they know what's going on, and so that the employees know that they can't take calls if they get a casual call from a journalist. They got to go to that designated spokesperson. We think it's important. I mean, Ian said something going back and forth on email with journalists. Have a statement ready. You know, journalists don't love statements, but sometimes it's safer to have a statement prepared in advance that you can give to the media, especially if you'd rather not respond to a specific request. Another one, limit the use of social media. It's very, very critical. Everyone's on social media these days. You've got to let employees know, please don't talk about our company or about our situation on social media. You know, you can say what you want to about your dog is behaving oddly during this period. Our dog is, but not about your companies. And
Roger, the difference there though is maybe to continue with the official company's social media accounts that are having vetted communications come out, but you're talking about letting employees know that now's not the time to be posting on your personal social media about work, about business, right?
Absolutely. And I think being prepared for the unexpected is critical. A camera crew can all of a sudden show up. They won't show up at a PE firm's office, but they could show up at an operating company's office easily, a manufacturing firm or whatever, and you're not expecting it. So expect it. It probably may not happen depending on what business it's in, but have that prepared statement ready. If they become combative and if they're on your property and it's private property, right? You certainly have the right to call the police. You don't want to get it escalated to that point, but they're not allowed to go on your private property with a camera crew in hand. So, but be prepared for that as something to happen. We have a client that owns 220 assisted living properties, and they're in the throes of it. And so this is advice that we've been giving them. Some of them have had crews just walk in the front door, and they're not allowed to do that. So it's important. And keep accurate records. That's it. Keep records of all calls received, summaries of your conversations. And I don't know, Ian, if you have anything over and above that.
Those are all good. I would say don't think you have to win every battle through the news media. Be prepared to go direct to your key stakeholders. Communicate in themes. Most people can't remember more than 3 things. And so distill your story. Third, if it needs fixing, be honest with yourself and fix it. Most people are fairly forgiving if they think you've identified a problem that you're actually going to fix. And then finally, I would say, since we're in the middle of chapter 1 here of COVID, I think no matter how tricky things seem right now, it's probably time to start thinking about chapter 2, chapter 3, and chapter 4. What are you going to not only be doing as a business, but what are you going to be communicating? What are you going to say now? How is what you do now going to play down the road? Because there's a long path ahead of this country.
And I always like to say also that, and I think, Ian, you alluded to this, it's okay to say you don't know the answer, whether it be to a journalist, whether it be to employees. There's a lot of uncertainty right now. And I mean, in the public company arena, for companies that give guidance of the next quarter or how the company is going to do, no one knows. And no one should probably be giving guidance because the guidance is, we're still in an uncertain time, and it's okay. And if there's something that a reporter thinks that you should have the answer for, you could always go back and say, I'm going to get that answer for you, or I'm going to do the best that I can. You don't have every answer.
It's very hard for high-powered, highly intelligent, highly successful A+ students who become top managers to say, I don't know. But sometimes the safest thing, you're right, sometimes the safest thing a CEO can say is, I don't know, but we're working on it.
Yeah, absolutely.
Yeah, and probably the most honest answer for some questions now is just that, because we simply don't know a lot of where we're headed directionally, and so I think great advice. So we've got just about 5 minutes left, and I feel like it kind of those may have been your kind of concluding statements. I don't know if there are anything else in terms of summarization or conclusions that you'd like to leave our audience with, as we're still in the midst of the COVID-19 period here. But I think, as Ian alluded to, right, we're at the point too where I think we need to be preparing for what does that recovery look like? What does that next step, that third step look like now? So I don't know, from that perspective, if either or both of you would like to perhaps just sort of wrap up or provide some sort of a forward-looking kind of view from your professional perspective. Ian?
Roger, I'll defer.
It's a hard one. I'm going to do what we tell our clients to do when we do these messaging exercises. We give them messages. We counsel them on how to speak, whether it's in front of a group or whether it's the media. And then we say, always go back to the message. Try to go back to the message, even if you're not totally maybe directly answering the question. So I'm going to repeat the 4 things I said in the very beginning. One is that in this crisis, silence is not an option. So don't try to avoid the subject. You can't. Number 2, to understand the sensitivities of the very specific audiences that are involved. If you're at the PE firm level, what are your operating CEOs doing? And how how are they in turn communicating with their employees, with their customers? So know the sensitivities of the specific audiences. Number 3, it's fine to be aspirational. Everybody wants everything to open up, but let's be realistic. It's going to hurt our business. We're not sure how much, but we're going to be putting plans in place to try to fix it. Be truthful. And number 4, communicate frequently, because it's one thing to come out in the beginning, have these beautiful statements on your websites. I'm sure all of you guys have, all of our clients have, our safety and health of employees, but you got to do more, because it's the silence that creates the anxiety and the uncertainty. And so communicate, be out there and be open.
Great.
I think if I were going to do a distilled summing up of a summing up I think I would say, first of all, this too shall pass. Every decade in my career, we've seen some form or another of a major crisis for business. And even though this is we hope, once in a 100-year event, every decade has seen some really, really major crisis that has created great difficulties for business. And smart, well-run companies that didn't run around with their hair on fire have made it through. Second thing I would say is just give it the kindergarten test. You may recall some years ago there was a book that was the premise of which was everything you need to know in life you were taught in kindergarten. Mm-hmm. Well, think about what you're doing as a business, as a private equity firm, and it all seems oversimplified, but what we were taught in kindergarten test is a good barometer for how your major stakeholder groups are going to react to what you do. Yeah,
I think that's great. Well, Roger Pondell from Pondell Wilkinson and Ian Campbell, Abernathy McGregor, thanks so much for sharing your perspective today. We've done a number of these webinars, and they've been more sort of narrowly focused on the private equity. And so I wanted to give our membership a slightly different perspective on, a strategy that can be employed to help in this challenging time. So I thank you for your expertise this afternoon. And for those of you who have watched, thank you for joining us. I want to highlight before we leave that a week from today, Tuesday, April 28th, we'll be having a CEO roundtable moderated by ACGLA's President Stephen Lee, partner at Goodwin Proctor. And our panelists will be Theresa Tucker, the CEO of Blackline, Roger O'Brien, President and CEO, Santa Monica Seafood, Tim Gardner, the CEO of Griffin, and Brian Williams, the CEO of the Shimming Group. So again, that is a week from today, Tuesday, April 28th, same time, 4 to 5 p.m. In the meantime, we'll be providing the video of this webinar to those of you who have registered and attended. We'd encourage you to look for that in your email. And of course, visit us at ACG Online, where we'll be able to show you this video and the videos of our other webinars. So Roger and Ian, once again, thanks so much on behalf of ACG Los Angeles.
Thank you for having us.
Thanks very much, Michael.
Bye-bye.